There is a mental model used by the world's most successful mathematicians and strategists. It is called inversion. The premise is brilliantly simple. Instead of trying to figure out how to achieve a massive, complicated goal, you ask yourself, how would I absolutely guarantee failure? And then you meticulously avoid doing those things. If you want to escape the financial trap of the modern economy, do not ask how to get rich. That question is too broad and it makes you a target for every grifter on the internet. Instead, ask how the system is designed to keep you broke. Once you understand the mechanics of the trap, the solution isn't motivation, it is mathematics. To break the poverty algorithm, you have to adopt a series of mechanical, often uncomfortable behaviors. We are going to look at 6 specific habits that invert the system's rules and buy back your freedom. Let's begin with the most basic unit of the economy, the things you wear. Imagine you need a pair of work boots. You have 2 choices. You can buy a cheap pair for $30. They look fine, but the cardboard soles will give out in 3 months and your feet will get wet. Or you can buy a premium handcrafted pair for $120. Those boots will last for 3 years. The person who buys the $30 boots ends up spending $360 over the same 3-year period, and they still spend most of that time walking around with wet feet. This is the quality investment. The system wants you to buy cheap, disposable goods because it creates a continuous revenue stream from your lack of capital. To invert this, you must refuse to pay the cheap boot poverty tax. You stop buying things, you start purchasing assets. Even if it means wearing your current shoes until they are literally falling apart, you save the capital required to buy the item that removes you from the replacement cycle entirely. This concept scales up directly to the grocery store. We discussed the penalty of buying single items versus buying in bulk. The system gates off its best unit economics, the wholesale pricing, behind an entry fee. You have to buy 30 rolls of paper towels at once to get the discount. This is the bulk barrier. The average consumer looks at the $20 bulk pack and thinks, I can't afford that today. The inversion thinker looks at the $3 single roll and says, I cannot afford the 400% markup. To break the barrier, you use your capital as a battering ram. You ruthlessly cut expenses in one area of your life just to stockpile enough cash to access wholesale pricing in another. Once you break through the bulk barrier on your basic necessities, your baseline cost of living permanently drops. You have just bought back a fraction of your monthly freedom. Once you have lowered your cost of living, you can turn your attention to the corporations that drain your monthly cash flow, specifically the insurance industry. When you sign up for car or health insurance, the default option is usually a low deductible. The corporation offers to cover almost all the costs if something goes wrong, but in exchange, they charge you a massive monthly premium. They are betting that you don't have the cash to cover an emergency, so you will overpay for peace of mind. To invert this, you execute the deductible hack. You use your own cash reserves to raise your deductibles to the absolute maximum allowed by law. You are taking on the short-term risk. You are telling the corporation, I will handle the small emergencies myself. In response, the algorithm is forced to slash your monthly premium. You are no longer paying a corporation to hold your risk. You have become the house. Over a 5-year period, the monthly savings from those lowered premiums will far outpace the cost of replacing a windshield or a bumper. But to execute the deductible hack, you need cash sitting in the bank. You need what most people call an emergency fund. But emergency fund is a terrible, fear-based term. It implies you're just waiting for a disaster. We need to reframe this into the FU buffer. The goal of hoarding $10,000 in liquid cash is not to fix a flat tire. The goal is to purchase cognitive freedom. We know that financial scarcity causes a state of cognitive overload that physically drops your working IQ. When you are constantly stressed about survival, you make poor reactive decisions. The FU buffer restores your intelligence. When you have $10,000 sitting in an account, your nervous system relaxes, the biological panic turns off. Suddenly, you have the bandwidth to think strategically. You have the power to say no to a toxic client. You have the leverage to walk away from a bad job negotiation. You are not hoarding cash for a rainy day. You are purchasing the psychological leverage required to make high IQ decisions. However, there is a danger in holding that much cash. If you leave it sitting in a standard account, the bank will use your buffer to enrich themselves. They will pay you pennies while lending your money out at 20%. You cannot allow the bank to harvest your liquidity. You must implement the cash cap sweep. This is a strict mathematical rule applied to your primary checking account. You set a hard ceiling. Let's say that ceiling is exactly $10,000. The moment your account hits $10,001, an automated script triggers. That extra dollar is immediately swept out of the checking account and routed into a compounding asset, an index fund, a business investment, or a high-yield vehicle. You put a hard cap on the bank's ability to profit off your labor. They get to hold your buffer and not a single penny more. Everything else is aggressively deployed to build your own wealth, not theirs. But all of these systems, the bulk buying, the deductibles, the sweeps, they all rely on one fundamental input. You have to actually fund them, and this is where most people fail because they are fighting a biological flaw called present bias. Human beings are wired to value a dollar today far more than $2 next year. If the money sits in your account, your brain will inevitably invent a completely rational founding excuse to spend it. You cannot rely on willpower. Willpower degrades when you are tired, hungry, or stressed. To defeat your own biology, you use the eat the frog payday. In the first 15 seconds after your paycheck hits your account, the money must move. Before you wake up, before you check your balance, before your brain can even register that you've been paid, automated systems must route your capital to your investments, your buffer, and your wholesale fund. You do the hardest, ugliest thing first. You pay your future self before the present version of you has a chance to ruin the plan. If you never see the money, you never have to use willpower to fave it. When you look at these 6 habits together, a new picture emerges. The system wants you reactive. It wants you buying cheap, paying high premiums, and keeping your cash exposed. It wants you to rely on willpower so that you eventually fail. Inversion thinking changes the game. You stop playing defense against the algorithm and you start building your own. You leverage your capital to buy quality. You leverage your buffer to buy cognitive clarity. You automate your behavior to remove human error. You stop asking how to get rich quickly, and you start methodically dismantling the mechanisms that make you poor. Because the ultimate truth of the modern economy is this: freedom is not something you are granted, it is something you systematically buy back.